The discipline of asset management has been around for a long time, especially in industries with high value physical assets like transport, mining, water utilities, and so on. With renewable energy assets, and solar in particular, being seen as much simpler to manage. Owners and operators often don't practice asset management, but should they? I'm Matt Stubbs, founder of Profergy. We help renewable energy owners and operators to deploy digital solutions that maximise the reliability and profitability of their assets. In this video, we will explain what asset management is, what is unique about asset management for renewable energy, and how it can provide improved reliability and lower the cost over the life of the assets. This is just one in a series of videos we're providing on this topic. In later videos, we'll look into some practical aspects of managing renewable energy assets and how streamlined information management can drive improved performance. Here in Australia, we have seen a massive expansion of investment in renewables. This chart shows the accelerating growth in deployment of wind and solar since 2010. If the world is to meet the goal of decarbonisation, this growth will need to continue to accelerate. So with the rush to build and connect assets, have we thought through enough about the whole life cycle of the assets? Look at this chart and consider that these wind and solar plants are becoming the foundation of our energy system. They will need to operate reliably over their entire lifetime, which could be 20 to 30 years. It's a big challenge, but the good news is that the systems we need to do that effectively already exist. This is a summary of ISO 55001, which provides a fairly sophisticated way of thinking about assets. Like all quality standards, you could think about it in terms of defined processes and ticking boxes for compliance. But it's also about people and culture. It provides a mindset for how to make sure things are working safely, efficiently, and not costing more than they should. At their core, all of the ISO standards have a strong focus on risk, and all of them provide a framework for continual improvement. Central to the system is the Strategic Asset Management Plan, which provides a roadmap for optimizing asset operation and financial performance. ISO 55001 was designed for very big, very expensive things, like traditional energy plants that spin, and long pipes, poles and wires, mining plant, submarines, you name it. But is it overkill for cheap and cheerful renewable energy assets like solar? We'll come to that soon. A central element of asset management is the asset lifecycle. Everything from initial feasibility studies for a new project through to design, build, commissioning, operation, renewal or replacement through to disposal is managed within the lifecycle. By breaking down the key phases of the asset lifecycle, we can focus on the aspects that are most important in each phase. The chart here shows a standard asset lifecycle for solar. This one's published by Solar Power Europe, who provide excellent guides for renewable energy asset management. Check the description below for links to their website. This life cycle is valuable because it helps us to align the measures and reporting required in each phase of a solar project. Information about the asset evolves during the life of the plant. We will cover asset information in more detail in a future video. Each phase of the life cycle has some fairly well-defined timeframes, although these differ with each project. The phases are development, engineering and procurement, 1 to 3 years, construction, a few months, operation under EPC warranty, up to 3 years, operation under ownership, perhaps 30 years, and decommissioning and disposal, a few months. Now we have a good idea about the life cycle, the next thing to consider is what are the responsibilities for effectively managing the asset at each phase. Keeping assets fit and healthy requires a number of different specialist skills. This chart from Solar Power Europe outlines the key roles involved across the asset lifecycle. The asset management function tends to be more involved with strategy, commercial, contractual, and financial aspects of operations. Operations and maintenance, or O&M, are more concerned with the technical operation, whilst engineers are involved throughout the lifecycle to design, build, commission, and recommission the plant and conduct audit and inspections. It's important that each player understands their responsibilities. Working to a standard helps provide that clarity and avoids this situation where issues fall into the cracks. Best practice asset management is asset-centric, meaning that the processes followed by all the players lead to predictable performance and cost-effective operation. It'd be good to hear your thoughts and experiences in the comments below. In your experience, are these roles well defined and understood? Just returning to the life cycle for a moment, The roles and responsibilities for asset management evolve over time, along with the priorities and focus for the project. During development, there's a big focus on establishing contracts, documenting and certifying the plant. During this phase, the asset manager has a big focus on identifying and planning for risks that will arise throughout the project. There is a big focus on the developer, owner and investor, as well as any counterparties involved in getting the project off the ground. During construction, all of the traditional rigours of project management apply, and during this time, the EPC contractor becomes the most critical partner. When operating under warranty, the asset manager needs to ensure that the EPC contractor is performing as required under the contract, and key risks like equipment failure are addressed under warranty. In operation under ownership, the O&M contractor becomes the key delivery partner with a focus on sustaining technical performance. And it's likely that the O&M provider will be responsible for the assets at end of life. The asset manager has a key role throughout all of these phases to coordinate all the parties and ensure overall performance and profitability. There is a lot that the asset manager needs to handle. Consider some of the key risks for renewables. Firstly, financial risk factors. There are things like power price fluctuations. There are trading risks where the entry of new players can lead to the cannibalization of markets. Financing costs, so is the debt and equity structure optimal for the project? The solvency of the off-taker, so how confident are you that other parties will be able to meet their obligations? There are regulatory and policy risk factors, like regulatory changes. What obligations does the business need to comply with? Political risks, so what would the impact be of changes in policy, for example with a change of government? And government-imposed compliance assessment risks, so what would be the time and effort to remain compliant, ongoing? There are contractual risk factors. How strong are the contract terms that you have in protecting the interests of the asset owner? There are environmental risks. Of course, weather is integral to the performance of renewables, so that always needs to be considered. In Australia, we also need to think about the impact of fires, floods and cyclones, which can have a catastrophic impact on the asset. There are technical risk factors like hardware failures and how do you handle disposal and recycling at the end of life. There are also commercial risks like procurement. What's the cost and availability of spare parts? Changing parties. So what if some of your counterparties have a change in ownership, control, they become insolvent? Grid works. What if you can't export to the grid because the grid is not available to you? Theft. How will you handle losses from everyday risks like theft? Your insurance policy needs to effectively ensure that your insurance covers all of those risks. Indemnification. Are you covered for the actions of your staff and contractors? When creating a business case for a new project, investors need to base their decisions on assumptions about these factors. Of course, a project should provide a positive return based on these assumptions. It also needs to take into account reasonable contingencies for what could change and the impact on the operational and financial performance. In recent years, issues like grid congestion and surplus supply, the so-called duck curve, have impacted on existing and new projects and slowed down the expansion of renewables. The asset manager plays a key role as they need to look ahead at likely changes and recommend the best course of action for a particular energy portfolio. For example, establishing power purchase agreements that cover off market risks, or perhaps adding batteries into the portfolio to improve prices that the portfolio can earn from generation. The risk profile for a plant changes throughout the life cycle. For example, during the EPC phase, risks from hardware failure are mitigated by warranty. In that situation, the asset manager needs to be sure that the equipment suppliers and service providers are meeting their obligations on time. Repairs that run over time can be costly in terms of lost generation, so the asset manager needs controls in place to ensure that work is completed on time. In operation though, a piece of equipment that is unreliable can be even more costly, both in lost generation but also in time, materials and effort to replace it. The benefits of asset management become increasingly evident in the operational phase. Decisions such as whether to repair or replace assets need to be informed by robust information about individual plants and relative performance against benchmarks. With robust asset management processes in place, The more rewarding part of the asset manager's job is to drive continual improvement. No doubt you've heard of Plan, Do, Check, Act in quality management. This approach is highly effective in operating renewable energy assets. Establishing measures and KPIs at each stage of the life cycle supports continual improvement. Accurate and timely information about asset performance enables the asset manager to understand how plants are performing against their contracted KPIs, but also relative to other assets and industry benchmarks. Complete information about incidents such as equipment failure recorded against the asset helps similarly to identify root cause for individual issues, but it also helps to identify patterns across plants that could demand systemic improvement to how operations are managed. So there you have the 20,000 foot view on asset management for renewables. Now, I realise this topic can be a bit dry, but it's valuable because using it as a foundation for the business of renewable energy helps to provide predictability and reliability, especially when it comes to getting a return on investment. In our next video, we'll jump into some real-world examples of how effective monitoring and management can improve asset performance and reduce downtime. Before I go, just a reminder about the services that Profergy provides. Our team brings a ton of experience in implementation and integration of digital systems. We're here to help the industry make better use of IT, whether it's providing real-time integrated reporting, streamlining business processes and data flows, ensuring systems are safe and secure, or providing a complete platform for managing renewable energy assets and operations. Visit profergy.com for more information. And please stay tuned to the Profergy YouTube channel as we'll continue the conversation with some practical and informative discussions to help get the most from investment in renewable energy. Thanks for checking in, and I look forward to seeing you next time.